Hey everyone, me Kevin here. So as we know, tomorrow there is going to be a whole host of testimony on what the heck happened between Robinhood and GameStop and Wall Street Bets and Melvin Capital and Citadel. Well, we have the written testimony here from Gabriel Plotkin, who is the founder and chief investment officer from, wait for it, Melvin Capital. Ooh, the big short seller of GameStop. This is kind of like the opposite of what we saw from Roaring Kitty, or it presumably will be. Let's take a look at this. Here we go. Here it is. Woo! Okay, here we go. So we've got Chairman Waters, Ranking Member McHenry, and members of the committee. I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading activity in GameStop. I am the founder and chief investment officer of Melvin Capital. I am humbled by these unprecedented events. Yeah, dude, because you just took a few $1 billion and lit it up into flames. You got burned. Okay, so many investors on all sides have experienced losses. I'm here today to share my personal experience and be helpful in this conversation. Yeah, dude, people are looking at you, bro, in terms of the guy who's gonna be getting some spanking. I understand that part of the focus of this hearing is the decisions of stock trading platforms to limit trading of GameStop. Okay, this is hilarious. He's literally starting out by talking about, it's Robinhood's fault, it's not our fault. He's basically pointing the finger right away. Oh my God. I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platforms' decisions. In fact, Melvin closed out all of its positions in GameStop days before platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that, contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Really? What was that, like $2 billion y'all got from Citadel? Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. Dude, you're smoking crack. Nobody's gonna believe that bullcrap line you put together. That is a joke. We didn't need the $2 billion. They just wanted to invest in us because we're really good investors. Really? Somebody wants to invest in Melvin Capital because you just lost a boatload of money on a trade? That all of a sudden made you so attractive that conveniently Citadel comes out and gives you billions of dollars? Ridiculous. Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. It was an opportunity for Citadel to buy low, right, and earn returns for its investors if and when our fund's value went up. Oh my God, whatever, dude. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. Right. My background, Melvin Capital. I'm here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school. I studied hard and got into a good college. Upon graduation, I did not have a job. Today, I'm married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. Notice how they always want to paint like this normal American story, right? I wanted the firm to represent his values: integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors, such as academic institutions, medical research, and other charitable foundations, pension funds, retirees, and others invest with us. We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin Capital's long/short investing strategy. Melvin specializes in the consumer and technology sector, including companies like GameStop, AutoZone, and Expedia. Most of our investments are long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. Literally, folks. Literally, we spent years on it because we suck and it takes us that long. When our research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might short the stock. Like with our long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the market goes down, we have a duty to protect our investors' capital. Oh, okay. Okay, yeah. So you shorted GameStop to protect your investors. That didn't work out. There are laws governing shorting stock, and of course, we always follow them. In addition, it is very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of stock, and nothing about our short position prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years ago earlier because we believed and still believe that the business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. January freeze untethered to fundamentals. Whew. All right. In January 2021, a group on Reddit began making posts about Melvin's specific investments. They took information contained in Melvin's SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. It's interesting. Notice how he's making the opposite argument here of Roaring Kitty here. He's claiming that that basically people who posted on Reddit encouraged others to trade in the opposite direction of Melvin, to like purposefully hurt Melvin. Oh, this is interesting. Thunder Nugget says, hold on one sec. Thunder Nugget here online says, that's collusion right there. Citadel claims to not be involved with investment actions that Melvin or Robinhood took against the stock, yet coincidentally invested the the amount of money that Melvin lost at the same time of the squeeze. Citadel buys 60% of Robinhood's order flow. Let's hope the justice system prevails. Ooh, good comment. Thank you, Thunder Nugget, watching on Twitch. Okay, back to the letter. The post said things like, it's very clear we need a second Holocaust. The Jews can't keep getting away with this. Okay. Others sent similarly profane and racist text messages to me. Can we get his number? Let's get him on. Let's interview the Melvin guy. In the frenzy during January, GameStop's stock rose from $17 to a peak of $483. Don't I know? My God. I'm pretty sure I have a memento that I will never get rid of because this is part of history right here, okay? If you got some GameStop, you got to hold forever, man. Diamond hands forever. Oh, I was so close. Come on, I was so close. I almost perfectly timed this. Here, look at this. Take a look on screen right here. Look at that. One share purchased at $459, baby. Yeah. Come on. Who got closer to the peak than that one share of GameStop I got? Come on, show it. Okay, let's keep going. I don't think anyone would claim that price had any relation to the intrinsic value of the company. The unfortunate part of this episode is that ordinary investors were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483, have now lost significant amounts. When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at a significant loss, both long and short, that were the subject of similar posts. AMC. That's it? Oh my gosh, loser. I'm personally humbled by what happened in January. Investors in Melvin suffered significant losses. It is now our job to earn it back. And while I do not think that anyone could have anticipated these events, I have learned much from them, and I'm taking steps to protect our investors from anything like this happening again in the future. I look forward to answering your questions. Dude, Melvin Capital guy. Basically, here's what Melvin Capital did. He said, hey, look, short selling's normal. This is like a smoking gun right here. Come on, this is a joke. You gotta be effing kidding me. Like, I'm sorry. This is ridiculous. The fact that Citadel invested in Melvin to proactively invest in Melvin because they believe in Melvin. Okay, we'll see what the documentation shows on that one. That gets subpoenaed, because that's ridiculous. And then he basically blames Reddit for making posts about Melvin. He's trying to take the position that Melvin was targeted because he's Jewish. That's what he's doing here. He's like, oh, I'm getting targeted because I'm Jewish, and now they're trying to do things that ordinarily wouldn't happen, and they're trying to make us lose a bunch of money, and we lost a bunch of money. Well, there you have what the CEO of Melvin Capital is going to say tomorrow before questions. If you found this helpful, consider sharing this. Also, make sure to watch the Roaring Kitty video, and make sure to come to the live stream at 9 a.m. Pacific time, 12 p.m. Eastern Standard Time on February 18th to watch the entire hearing unfold live. And we'll get to see the questions and answers too.